Hello, everyone, and welcome to welcome to the CFO Summit. My name is Jan, and I'll be moderating today's call. Our speaker today is Karen Begelfer, CPA, CIA, CRMA, and former Vice President of Internal Audit at T-Mobile Sprint Corporation, presenting data analytics, enhance efficiency and effectiveness. We'll turn to the presentation in just a moment. But first, I want to go over the web conference instructions. Everyone is currently in mute, so the background noise does not bother the other participants. And to view today's presentation, as the screens change live, you may go to the link that was sent to you in your reminder email. Once there, you may click on any page to post a question in the comment field that pops up. We'll make sure all of your questions are answered. For the newer participants in the group, it might be useful to review some of the main benefits you can take advantage of as a member at no additional charge. First are the live monthly web conference meetings, which you've already dialed into today. I hope you find these useful, and we have an excellent lineup, which you can see by going to our website schedule page. Second, we do record all of these, so if you're traveling or stuck in another meeting, log in at your leisure, and the full archives of past meetings are available to you with a number of interesting topics. Third, get to know the other members. By logging in, you can see all of their profiles, and we're glad to make introductions if wished. Fourth, if you're wrestling with any key issues or decisions, we strongly encourage you to reach out to the other members, and our site makes it very easy to post questions. The seniority and experience of your fellow members makes this the best possible forum to get advice from others who've probably dealt with the same issues and can give you sound advice on what worked and what did not. Fifth, we really encourage site visits. If you've not visited others' offices to have a great discussion on best practices and see their facilities, please do so. You can log in to see the other members' companies and cities, so feel free to reach out, or as mentioned, we're happy to make introductions. Sixth, we also generate executive summaries of meetings, including the key takeaways and learning nuggets, so that you can reference them and put them right into action. Seventh, our members are very busy, so we started a service where we pick out the top 6 most interesting articles among thousands at hundreds of sites to keep you abreast and ensure you don't miss the key ones. Lastly is our Book of the Month summary that you can either read or listen to as you commute. Each month we'll be selecting the most interesting book, then summarizing the ideas, so within minutes you can absorb the key takeaways. There are many other benefits, of course, but I wanted to highlight some and ask you to keep a lookout in your inbox for a number of these each month. That takes care of the housekeeping items. Give me just a moment to pull up the speaker's presentation and introduce her. Okay, all set. Now, before I turn the call over, I'd like to tell you a bit about our speaker today. Karen Begelfer is the former Vice President of Internal Audit at T-Mobile Sprint Corporation, where she owned operational and retail audit as well as enterprise risk management. Prior to that, Karen was the Chief Auditor and Head of Enterprise Risk Management of Payless Holdings, which followed her service as a Director of Internal Audit at the Home Depot, where she directed audits in the finance and shared services areas, including Sarbanes-Oxley testing. Previously, she delivered post-deal integration services at PricewaterhouseCoopers and was a member of the corporate audit staff at General Electric. Karen, thank you so much for being with us today. Just say next when you wish the slides to advance, and the floor is all yours.
All right. Well, thank you, Jan. Good afternoon, everyone. I'm Karen Begelfer, as Jan said, and I'm excited today to be speaking with you about a subject that is important to all of us, which, of course, is data analytics. Let's start on page 2 of the presentation. Are we pulling up page 2, Jen?
Yes, I'm on page 2. You might want to refresh your page.
Okay, well, that's all right. You know what? We're going to keep going there. I don't need to see it because I've got a hard copy here.
Okay.
So, starting on page 2, the AICPA defines data analytics as both a science and an art of extracting useful information. To a greater or lesser extent, it permeates everything we do, and done correctly, it's a really powerful tool, of course. Moving on to page 3, the benefits of analytics are really numerous, including empowerment of the decision maker and the people who execute the company's directives, the ability to predict and react to sectors affecting the company, and collaboration between people who want or need to work together. That document you see on the right-hand side of page 3 is from IBM. I won't go into each detail on it, but the overall flow is first raw data, enterprise data, and contextual information get combined to produce insights that enable business leaders to achieve their desired results. I definitely recommend that you look into more detail at that graphic when you get some time, because it's quite useful and it's a great way to describe how the analytic process works. So moving on to page 4, the buzzword when it comes to analytics, I'm sure you've heard before, is big data. But what is that really? I would put forth it's 4 key areas. It's not just lots of data, although that is one aspect of it. It's data from a variety of sources, and not just the traditional sources like the GL. It could be very non-traditional sources like emails or voice messages or even videos. Moving on, big data is also the velocity of the data flow. How fast can you access that data, and what that means for the speed and the output of analytics. And finally, it is the veracity of the data. In other words, the reliability and the accuracy of the data that can influence the outcome of the analytics being performed. And all of these contribute to this concept of big data. Let's turn to page 5, and let's explore some types of analytics. Now, page 5 gives us some definitions. This is from Gartner that I think sums it up pretty well. First of all, analytics can be descriptive, telling us what happened. For example, sales dropped below seasonal averages this spring. Then there's diagnostic analytics. This tells us why it happened. For example, certain sales promotions did not appeal to the customer, and the take rate was not as high as expected. Then there's predictive analytics, telling us what will happen. For example, based on projected sales and the makeup of our customers, this same promotion will have an X% success rate in the future. And then finally, and what I might argue is most important, is prescriptive analytics, telling us what we should do, giving us options for the way forward. For example, in order to decrease marketing and advertising costs and increase the effectiveness of promotions, perhaps certain promotions should be offered at certain times of year, or certain promos should be run in response to competitor changes in order to be most profitable. Moving on to page 6, the timing of analytics is also very important to think about. So, for example, they can be ad hoc, someone knocking on your door saying, hey, can you cut the data this way? They can be event-driven, so you had a promotion and you want to know how it performed. They can be automated, so these are maybe ongoing reports that run each day or periodically, and they may be used more for trending purposes. And then there's real-time, which, of course, is a constantly running analysis. For example, you could run analysis of store returns in real time to see if there are any trends in customer or store associate fraud in returns. And that would be a great example. If you ran that real time, you could reach out to stores that have a higher level of fraud and stop it before it becomes a larger issue. So there's value to each of those types of analytics, and you most certainly want to think about the frequency of the analytics as you're developing it, executing it, and delivering it. So now let's move on to page 7. There are 2 ways to structure a data analytics team, because it's important to have a group of folks that you can rely on to produce these analytics. You probably don't want every single person in the company running analytics. You want a group of power users that can really get at that data. And everybody can learn some amounts of data analytics, but truly there should be a group that focuses on it. So the 2 ways that I would propose to think about it is one centralized group that runs all analytics. Now, this is a very cost-effective and efficient structure, but sometimes smaller groups get deprioritized in favor of larger, more visible analytic needs. Certain groups may have analytic needs, but they never actually get the analytics they need because other, larger importance or larger visibility topics get the priority. The second way to structure data analytic teams is in multiple smaller groups across the company that cater to the needs of specific groups. That way, the smaller groups get the data they need. But also, the flip side is this is a little bit more costly because you're duplicating those skill sets in different places across the company. Now, for internal audit, where I come from, in my experience, our vision was to enable identification of key business risks in order to plan our audits and also to be able to curate data in support of our existing audits. So my experience really lies in that second example where several data analytic teams were across the company, and within the internal audit function, I had a small subset of folks who were power users who could enable the analytics we needed to plan our audits and execute them. So when creating this last time I was responsible for, we first identified people from our broader audit organization who had an interest in being on the analytic team. I always say I can teach people how to audit, but I can't teach people enthusiasm and commitment. And so if folks had a genuine interest and an enthusiasm for the idea of data analytics, those were the people I wanted. Then we determined what skills and tools we already had. Did people already know how to do it, and what tools were we using today? And then which tools would we need based on our vision? We then addressed the gaps with additional tools and training. This is an ongoing activity, of course, as new tools and training come out, and as new business needs arise as well. Then we executed, making sure we tracked our goals and results. And this can be a tough one because you really want to avoid the pitfall of just counting numbers, like the number of analytics implemented. I've seen some groups really excited to tell you, I implemented 92 analytics. Well, that number doesn't tell me the quality or the impact. It just tells me how many you did. And so, you have to be careful using that number. You also have to fight the urge to always just assign pure dollar impact to analytics also, if you don't provide the context to think about those dollars. For example, an analytic might be used to monitor and track compliance. And compliance may not have a dollar savings associated with it, but of course non-compliance could cost an awful lot of money. And you might not even be able to estimate that money. So the metrics you use really need to be provided in a way that gives a well-rounded picture and also provides context for the numbers you're talking about. So let's go a little bit more into detail on these 4 steps with some real examples. On turning to page 8, one example in my experience, we wanted to better evaluate the potential risk for fraudulent returns in stores. We're notified of a potential misconduct around returns for cash at a specific location. Now, items were able to be returned to retail stores for cash without a receipt for proof of purchase. And this included accessories that didn't even have serialized, that were not even serialized. So if someone ever stole something from the store, they could come right back in the store and say, I want cash for this because I want to return it. And they were being given cash. And that was a scenario, in many cases, that was indicating fraud either on the associate in the store's part or on the customer's part. So through those analytics that we performed, we found another large store with a large volume of returns that follows the same pattern. In addition, so that's the 2 ones that you see on that chart to the right that are circled at the top, but also we were able to isolate the specific behavior that indicated the fraud and check to see where that same situation occurred, even in smaller stores, finding individual employees perpetrating this fraud in a much smaller magnitude, but doing it nonetheless. Following this discovery, the scope of the analytics to monitor all company stores was established, and there was some additional analysis on that was at a store level that identified issues with a lack of completed inventory counts, and then issues with reverse logistics for large accessories to go back to their original vendors. So just one example there of how all the pieces work together. So moving on to page 9, let's move on to the evaluation of the analytical tools and environment. You'll need to assess the various sources of data that are available in order to determine which tools to use and what skills your team needs to have. And some sources of data to consider are, first of all, enterprise systems such as PeopleSoft, transactional systems like your point of sale, textual documents like contracts or emails, and then, of course, even online presence such as social media or other posting forums. So once you determine what data you have available to you on page 10, you can determine which tools you need and what skills your team needs to have. And there's a lot of tools out there. You really need to think about them in terms of what you need. So first, there are tools to actually perform the analytics, and those are things such as ACL or Alteryx. You can see some others on the page here. There are tools that enable you to display your analysis in a format that's easy to consume, basically data visualization, they call it. And some examples here are MicroStrategy or Tableau. And then there are tools for storing data, associating it with other pieces of data and retrieving it, such as a SQL server or Teradata. So it just depends what it is you're trying to accomplish. But I would say that all three of those categories work together for a more fulsome data analytic program. Now, something worth noting that some of these tools are what they call open source, meaning it's free for all and widely used. And then some other tools need to be purchased. Now, these open source free tools can be very powerful, and the knowledge out there on those tools is vast, and people frequently are willing to share pieces of code with you or just their knowledge in general, and so they're well known. But keep in mind, many people know the ins and outs of these tools, including some people with ill intent. So they are more susceptible to some challenges from hackers and other things, but they are free. And open source tools include things like Python, which is easiest run on Jupyter Notebooks. R, you may have heard of, that's been around for a while. That's easiest run in RStudio. There's JavaScript and JavaScript libraries. There's Postage SQL databases. There's Power BI Desktop. That's another big one right now. So there's a lot of different tools that are open source that you can use that are free and can really help you get started here. And then there's some tools for purchase, which of course are also powerful as well. There's data visualization related to Tableau that's commonly used. You can also do a little data manipulation in Tableau, but it's really for data visualization. There's Alteryx for some simple analytics, and they have some good visual tools and data connection points. There's ACL Analytics Robotic Server. This is actually what I have used in several companies to do audit analytic automation and maximize our ability to do analysis and explain different pieces of data. And then there's Power BI Pro, which is similar to the free version that I mentioned earlier, but with the ability to share and collaborate with peers. That's what they add on that you're paying for. So this is all an iterative process that will evolve as your needs evolve. And of course, there are new tools coming out all the time. I just listed a few, but there are others out there, and people are developing these quite quickly because this is such a hot topic. So moving on to page 11, after all of that, then it's time to look at the skill sets of the team. There's many resources available, again, some free and some at cost to you or the employee, in order to bring their skills up to a level that they can be most effective in contributing to your data analytic program. So, of course, there's training by the tool vendors themselves. Many will offer some basic training when you purchase a tool, or you can negotiate training or more advanced training to be thrown in with your purchase. There are vendor industry and professional organization conferences that can offer you the knowledge you need. Even if the purpose of the conference is broader than the specific tool you're looking for, you may be able to attend tool-specific sessions or network with other companies who already use the tool. Of course, there's also higher education programs that may be of help. For example, I've actually seen universities work with companies to curate a certificate program on specific topics like procurement or, in this case, even data analytics. And finally, of course, there are plenty of online free courses that you can find by Googling them. Two good ones are Coursera.org and edx.org that I've both seen before that have been very helpful in developing my team's skill set. So turning on to page 12, let's consider implementation. First, let's tackle sampling, which is not new, I'm sure, to any of you on the phone here. Now, full population testing can be preferable for its accuracy, and if you tell someone I tested every single record and this is what I got, that is a great thing to be able to rely upon. It gives you a whole lot of credibility. But sometimes factors like system limitations or time or even cost may prevent you from looking at every item. So one approach that my teams have taken in the past is to identify a higher risk subset of the population in order to speed the analysis. Let me give you an example of this. So in one example, we were auditing courtesy credits. Now these are credits to customer accounts for customer service or promotion. And we noticed in a 3-month period, there were 1.9 million credits issued, which was quite higher than normal. So in order to analyze these credits, we needed to do it quickly. So first of all, we, of course, took out every account that did not receive a credit, so that we limited it quite a bit there. And then we eliminated credit reason codes that had only a small number of credits issued. Now this was important because there were over 100 potential credit codes. So eliminating the bulk of them really helped clean up the analysis and the messaging as well. Finally, we looked at how to segment the data to tailor the analysis to the questions we were trying to answer. For example, we cut the population by number of credits issued per account, and then we cut the data by the number of dollar credits per representative who issued the credits to get us to the point where we were really looking at the data most relevant to our interests versus all 1.9 million records. That obviously helped us speed it up quite a bit, and we were able to point to a broader population, not only to do the immediate analysis, but also to monitor for future analysis as well. So moving on to page 13, the chart you'll see on 13 is one of my favorites. So I'd like to tackle in more depth what we mentioned earlier related to data visualization. Now you can think of it in two ways, depending on your data and the message you're looking to portray. First is decision making. Reports can show data graphically from the data analytics, of course. For example, this promotion outperformed these other promotions when cost versus number of new customers is compared. Therefore, we should choose that one promotion to run again. Or these top 3 people were our best salespeople when measured by profitable sales, so they are the 3 that should win the contest for that trip to Florida. And these sound like just kind of pulled out of the air, but these are actually analytics that my teams have run. The other way to think about data visualization is for ongoing monitoring where you are continuously updating the data to identify trends. Ongoing sales data by week is a good basic example of this, and sometimes baselines are used for visual triggers, such as adding an additional line to the graph showing information such as prior year sales in the same time period. And the graph to the right is a great depiction of the decision-making behind what data visualization you want to portray. This chart comes from Dr. Andrew Labella, and he's a marketing professor at Catholic University of America. And what you do is you start in that middle. That is the most important thing. And notice that this is right there in the center to call attention to it. What are you trying to show? The types of tools and depictions you use all flow from that very basic question. Unfortunately, I think it's really common to see people tell the right story about a set of data, but then use the wrong graph to portray it, which confuses the listener and waters down the person who did the analytic, their message. So finding yourself in the right place on this chart is really the key to having a good analytics output. You can have a great team that's highly skilled. You can have fantastic tools that everybody knows how to use, but you need a way to show that data in a format that's relevant to the listener, that truly tells the story that you have seen in that data. So, moving on to page, let's see, where are we here? Moving on to page 14, we go into the last stage, which is implement. Now, I always tell my auditors that they can do the best work in the world, but if they cannot communicate what they did and their conclusions, then they have completely missed the whole point of the work. The focus is not on, if you take one thing away from this today, the focus is not on the fact that you did the analysis, but rather what the outcome was and who it mattered to. And that's really what you need to keep the focus on. In my experience as a VP of audit, I reported out regularly to the business process owners, the CFO, the CEO, the audit committee, and if you think about it, each of those stakeholders have slightly different interests, and each requires a different level of detail. And some even require multiple views of the same data so they can truly understand the message that is coming out. And you know, something else that I would say is we don't just stick to analyzing the data and saying what happened historically. Remember those 4 points I talked about earlier? Not only do we analyze, not only do we explain why, but we also give some possible ways forward. So it's a much more result-oriented analytic. It's not just, this is what happened, go listener, go figure out what to do. It's, this is what happened, this is why it happened, and therefore here are some options that the business can use to move forward. That is a very powerful position to be in, and that makes the overall message so much more impactful to the organization as a whole. So when you think about analytics, again, I come back to, it's not just, hey, I did an analytic, it's what does that mean and what do I do with that information? So also, post-data analytics, you need to consider how you manage that data going forward. I always say you watch what you wish for. You do an analytic, then everybody loves it, now everybody wants it going forward. So, you know, some things to consider. Do you need to distribute dashboards that display results of the analytics periodically? So is this something you're going to want to do again every once in a while, every month, every quarter, once a year? Do you have a need to continuously update certain key analytics for trending and monitoring? This could be something that, you know, you trend over time, like sales or fraud or dollars saved or advertising costs. just something that that leaders will need to see over time to see what direction it's trending. Also, should you schedule future reviews with the relevant audiences to ensure that the analysis they receive is evergreen? How many times have you been to a meeting where leaders are talking about a decision they're about to make, which is based on historical data, which isn't wrong, but it might be historical data from so long ago that the new data, the evergreen data, might actually tell them to do something different. So, how important is it to make sure, if you expect that the results of the analytics will change quite a bit over time, when should you be bringing a new analysis in front of your stakeholders so that they can be most up to date on the data and what that means for them? So these are just some of the questions to consider. But really, the key message from the implement phase is that the work does not end once the analysis is completed. So again, watch what you wish for, because as you become known for producing these quality analytics that tell the story and help move the business forward, you will be relied upon more and more to become that strategic partner with the business to help figure out and mold the future. So that wraps up my formal presentation for today. I'd like to see if anybody has any questions for me.
Thank you, Karen. We really enjoyed your presentation. Before I check the chat line and present the questions there, do we have any live questions? Again, it's *6 to unmute your line and go ahead with your questions. Or as a reminder, you can also click anywhere on this last slide and post your question as a comment in the form that pops up. Okay, we've received several questions throughout your presentation, Karen. Keep in mind you may have touched on these topics, but I'm going to ask them all anyway, just in case there's something you would like to add to or elaborate on. The first question that came in is, where should a centralized analytic team be housed within a company? And what's the best way for other employees to communicate with that team and make requests and receive results?
Sure, that's a great question. So what I have seen is, the data analytics team in some companies that I've worked with sits within the finance organization as a separate group, but still rolling up under the CFO. It would be really important, though, if that's where it's at, to ensure that that team was not just focusing on financial metrics, because there really may be a need in other areas of the business for other types of information. For example, customer service may have a very big interest in number of calls coming in, or number of calls that got referred to a floor manager for help, things like that. So if you're going to do something centralized, no matter where you put it, you still need to keep a broad perspective on what the data needs are. Alternately, I've heard data analytic teams sitting under IT, because those are folks who usually have a lot of knowledge of how the systems work, knowledge of what data is in different tables across the company in different systems, and so they can be a great tool for that. The downside is that there are a lot of cases where the IT folks know the data really well, but may not be able to anticipate what the needs of every team across the company would need. And so they really know the data well, though, so there's got to be more of a partnership there. My personal experience is companies that have a distributed data analytics team, smaller ones across the company, there's always someone who raises their hand and says, wow, it would be so much more efficient if everybody was under one roof. But then it's really hard to make that happen, to pull those skills out of different departments across the company and put them all under one roof. And my example was, there was some talk about doing that at a company I worked for, and that meant that my data analytics team was going to go away from the internal audit department altogether and serve this broader group. Well, when you compared our data needs to data needs of some other organizations, some of those data needs actually would take precedence over our stuff. So then we wouldn't be able to get our stuff, and not being able to access that information was not an option. We need to conclude our audits. We need to do testing. We need to pull data. We need to have conclusions, and if our requests were deprioritized, we couldn't move forward. So there are some challenges to a centralized group. But of course, as I mentioned, the distributed group is going to cost a little bit more money because it is going to be a couple more folks, and they are going to be across the company, and you're paying for more training and that whole thing. So, but ultimately, how it was that a larger single group was thought of in terms of the second part of your question. There would be a centralized database of requests that would come in that was established through the company's intranet. And there would be kind of a form to fill out of here's what you want, here's how you want it, here's the date you want it, by all kind of the critical user information that you would need. You would submit that through the centralized group, and then unless it was something really obvious and straightforward, someone from that central group would reach out to the person to talk about specifically what their needs were. Because sometimes users, and I even see this in internal audit, sometimes auditors, they ask our audit team for things, and when the analytic team probes a little bit more, they realize that's not what you asked for isn't actually what you want. You want X, but you kind of asked for Y, and when you think about the data available, we're going to give it to you in this different format to really answer your question. So having that dialogue between a central group and the people who need the data is really, really critical to make sure what's produced is exactly what's needed.
Good, okay, that makes sense. Thank you. The next question that came in, when you do automatic audit runs, how often do you review the results?
Well, it depends. Again, I hate to keep saying it depends, but it depends what it is you're looking for. So, for example, if you're doing automatic or ongoing data runs, you can think about it in two ways. First, if you're doing it to trend information over time, and I keep coming back to sales data, which is kind of a basic example, but it could be trending anything. It could be trending fraud. It could be trending number of IT products, projects. It could be budget numbers, whatever it is you want to trend. That would be run periodically. Hopefully you would set up some sort of automatic feed, so, every day or month or week or, whatever the case may be, the analytic is run, it's fed into a standardized report, and then that report is distributed to the people who need that information. It should be a fully automated process. That would be ideal, so you don't have somebody looking at it every day or every time you need to run it. And that would enable people to see the trends over time. The other way you can look at it, and this is something that we use in audit quite a bit, you can run ongoing analytics that just run in the background. And ACL is a product that I have used for this purpose quite a bit. Runs in the background, maybe runs quite frequently, maybe every day or every week. And what a lot of tools will do is if you tell the tool what is an exception to the rule, it will spit out information from the analytic that's run each day that meets those exception criteria. So let me give you an example. If you are doing an analysis of expense reports, and you want to, and your company's international, and you want to avoid any issues with the Foreign Corrupt Practices Act, which basically said this is a U.S. government requirement, and it says you cannot go bribe officials or anyone working for the government in any other country in order to get business or maintain business in order to sell or operate in that company. You cannot give bribes. That's a law. It's very serious. Companies can get hit with millions of dollars of fines. Well, one way that people can hide that fraud, if you will, one way they hide bribes is when they submit expense reports, they will put certain charges as gifts or entertainment. Now, sometimes they very well may be actually gifts or entertainment, but those are the types of things, especially if it's done frequently by individuals, that you want to keep an eye on and go look into further. So I have, in the past, had my analytics team run analytics that will look at all expense reports, and any time the word gift or entertainment pops up in a expense report, we would actually have people who would dig into that to figure out exactly what that was to ensure those descriptions were not masking a bribe. So what that analytic did, it took everything that was just normal or everything that we weren't interested in looking at and just kept it in the background. And it only produced things for us to further dig into, which is great because then you're not looking at a bunch of stuff, of course, that you don't need to see.
Good. That's interesting. Okay. The last question that came in is, how do you communicate findings to the business units, and who decides on next steps? Is it all up to the team?
Yeah, so I would say when you communicate to the business unit, each group, and depending on who you're speaking to, may have a different need to understand part of your analysis. Different folks may have different interests for different reasons. I mean, think of a manager who processes accounts payable every day. They may have a need for a cut at the data or the messaging that's very different than if you're talking to your CEO, right? And you want to tell the CEO something about accounts payable. You're probably not going to tell him each individual item that gets processed and, what in the processing may be wrong or need to be fixed. So first of all, it's really looking at the audience. As I said, that being said, as I mentioned earlier, I'm very focused on not just doing the analytics, but also telling the story of why, telling what might happen in the future, and then providing options and alternatives. Ultimately, it's up to the leadership of the company or the expert in the company, on that subject, to truly make a final decision. Now, so I have been a VP of internal audit. If you provided me an analytic that told me something about my team and talked about some options going forward, I might, take that and make a decision on that. But of course, there are other types of analytics you may provide to, the CFO, the CEO, the CMO, the COO, that whole C-suite. And ultimately, of course, they would make a decision based on the information and education that you have provided them. So in many cases, you're doing these analytics to enable a company to move forward, even if you are not making the final decision yourself.
Okay, good. We've covered everybody's questions. Do you have any final thoughts or words of wisdom you'd like to share before we end the summit?
Sure. I certainly appreciate everyone being with me today and listening to this presentation. You can tell this is a topic that I really get excited about. Excuse me. I get excited about because how powerful it is and how helpful it can be to a company. Just that educational process of not just thinking something is happening a certain way, but knowing for sure it's happening a certain way, and being able to tell the story with specific data and facts and numbers, that really helps shape a very productive conversation across the board. And so, to me, this is huge. The other takeaway that I would leave you with, and again, I mentioned this earlier, I truly believe that you can do all the work in the world, whether it's the analytics or anything else. But if you can't communicate what you did and why it's important, it really waters down the value of whatever analytic or piece of work you did. And so it's important to think about not just crunching the numbers from an analytic standpoint, but but messaging, communicating what you did and what you found in a way that resonates with the listener and is most valuable to them. Too often I see people performing analytics but completely messing up the delivery of the quote-unquote "so what" to the piece. And that just, in my mind, means they put so much effort into doing the analytic and didn't put enough effort into thinking about how to tell the full story. And that's really the value that comes out of all of it. So we talk about the tools, we talk about the team, we talk about the skills, but probably most important in my mind is crafting the right message from all those enablers.
Wonderful thoughts, Karen. And on behalf of the executives on the line, I'd like to thank you for sharing such powerful ideas and key thoughts with us today. Your involvement and dedication to our profession sets a high benchmark for others to follow. For all of the participants on today's call, thank you for your continued membership and insightful questions. For today's speaker, the meeting's now concluded. And Karen, thank you so much again. Everybody have a great day.
Thank you all.